Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, this is Billy Ray Valentine from 100 South Broad Street, Philadelphia, Pennsylvania, hitting the frustration index at 300% today, folks. Had a lot of things going on. Some of them worked pretty good, and a couple of them didn't. But the one I want to show you here that was really frustrating was the gold market. The low that we made here in the gold down here at 1810, okay, was an exact 50% retracement of the low from 1618 all the way up to the high at 1975. They came in at 1810 today, and I was doing the video, and the problem was that I couldn't get the data to come through. For some reason, my data had crashed, and that it happens occasionally, but it was right during the video. So I said, well, let's wait and see. I said, watch, it should have a pretty good move. Well, you can see a perfect pullback here to the 61% retracement there at 1814. I didn't, at the time I was putting this in, it was over in this area right here. By the time I sent the video out, this thing had already exploded. It went off the top of the page. We had a $30 rally from the low to the high, from 1810 to 1840, and I was standing at the altar without nothing going on. And that happens. And I'm going to show you another one too, because if you think my life is easy, you'll be surprised. Sometimes it's not. Let's take a look here at another one that was just absolutely perfect. And I'll just, this is all part of trading. I'm telling you this because I know you go through the same stuff. And if you think I don't go through it, you're being a little naive. Here's a 2-day run here in the crude oil. There was the yesterday's low. If you remember, we were buying it down here, and we had a pretty nice rally, ended up breaking even on it. And then, of course, it had the big run up today. And you can see here in the red box, I was looking at 78.03. And you'll notice here the ABCD pattern measures to 1782. Shut the front door. 77.82. And the high was 77.83, and there I again standing at here. I'll bring this up here to show you. And the reason why I'm saying that we had some really nice trades that worked out. It was a lot of trade today because we had so many patterns completing here. But you'll notice this was a really perfect ABCD, folks. This is the kind of thing I'm going to be covering on May 1st to show you how to, measure these so that you'll be able to see when time and price come together. That doesn't always happen. That only happens about 40 to 45% of the time. The rest of the time, these extensions move up to 127 or 1.618, or the prices shift, and they don't hit the exact ABCDs. The ABCD pattern will be there, but it will not be perfect in price and time, and that's why it's a little bit more tough to look at. Remember, we had Mike Moore on last week, I believe. He was telling us about crude oil, and we've had this nice move off the bottom, and that's we're going to have Mike as our guest here at the halftime break here to see what's happening with some of these other markets. The other one, remember, folks, I posted that Japanese yen trade. We went right up to the 382. We went above it by 30 pips. And that's where my stop was. And unfortunately, we got stopped out of that. But at the same time we were doing that, if you take a look here, I want to get the price up here for the euro to show you what was happening in the euro for that time. Hold on one second, and you'll see the euro was just absolutely mathematically as perfect as you can get. Had a perfect, you can see the ABCD down. There's your 382 retracement right here. There's your ABCD down. Nice rally right up to the old bada bing, bada boom, 382. And now it's started to come down sharply. It's got well over $900 profit in that one today. So, and then we had soybean oil. We had short soybean oil. Not only that, we shorted it and then reversed and went long. And that's been a really nice winner for us today. And then, of course, the big daddy rabbit was the one we had in the Treasury bonds. If you'll remember, we've been talking for a little over a week and a half about the possibility of the Treasury bonds making 123.11. They hit 123.08. They've rallied a little more than a full point today. So we know that one is lined up just absolutely perfectly. You just can't pick it any better than that. I mean, maybe it's luck, I don't know, but luck is where preparation, opportunity, and the only preparation I didn't have was in that darn gold market because I missed that one, and that was the biggest one of the day, and I was a little frustrated with that. The stock indices are still trying to hold together. The reason why they're having trouble, as I mentioned on the beginning of the show, is Goldman Sachs. That stock has down 10%. And because it's price weighted and it's in the Dow Jones, it makes the Dow Jones skewed. And people, the first thing they show you on Bloomberg and CNBC is what the Dow is doing. And the Dow is only about 10 stocks. This happens to be one of them because it's one of the highest priced ones, along with Travelers and I think some of those other insurance companies. But in other words, Caterpillar. But this is still in an uptrend. You can see here we've got higher bottoms here in Goldman Sachs, so there's nothing wrong with this. Remember the key number in the S&P, and that hasn't changed at all. That number is at 39.47 3/4. That was a low on Friday. The 61% retracement on the daily S&P and the cash S&P was at 39.48. It went one tick below that. And if you don't think that's a coincidence, I'll have to, reissue some stock certificates. Speaking of stock certificates, I've been asked to do a live trading session for the Money Show over in Las Vegas on April the 26th between 7 and 9 a.m. They've never had a live trading session there. And so they asked me to do it. So I said, yes, I'd be happy to do it. And if we're not profitable, everybody that attends gets $1,000 as they leave the room. Either that or 2 shares of the Brooklyn Bridge. It's my choosing. I'll have to figure. You know what? Probably 2 shares of the Brooklyn Bridge is probably worth a lot of money with those stock certificates. So that's a joke, folks. There's no guarantees, of course, but I will be doing it live, and which I will enjoy doing. And it's early in the morning, so we'll have lots of activity. So that'll be fun also. But I did want to bring to your attention, the frustration that I had today because. You can't get them all, but when you miss a move like that in gold, you just want to bang your head against the wall and say, oh, my goodness. And then also get stopped out on the exact high tick in the Japanese yen, and it's broken well over 110 points. So the difference between minus 300 and plus 750 is a little bit of a sting, too. But we made nice money in the other trade, so no, you can't complain. Well, you can complain, but no one's going to listen to you. And I don't know why I'm even bringing this up because I know you're not listening to me. But I go through the same frustrations you guys do, folks. There's no question about it. I think I don't. You're got some news coming. Hey, 877-927-6648. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I have been asked to take a look at this stock. I don't know what it is. It's ENPH, Elizabeth, Nancy, Philip, Harvey. And you'll notice here, this is a bullish chart, folks. You have higher tops, higher bottoms. You'll notice the recent low last week was exactly at the 61% retracement. And it's the moves. I mean, this is such a harmonic stock, you could write teach a course in it. Look at the harmonic number on the way down. These are equal, folks, stopping exactly at the 61% retracement. You can see the 3 drive to a top pattern. That's easy to see. And look where it is right now. Now, what I did was, since they asked that, I thought I better go and look at it also on a daily basis. So that would give us a rough idea of what it looks like on the daily chart. And you'll see something even clearer because you'll see the 61% retracement easy enough. And the other thing you'll see is there's a nice little 3 drive to a bottom last week that bottomed. So as long as this stock can stay above $200, it's got a really good chance because it's a stronger than market stock. You know, many of these stocks have come down 70, 80, 90%. This is, making 61% retracement from the low last year. So that's actually quite, and it's already moved quite a bit. You can see the 3 drive to a bottom pattern. So this is still a bullish chart as long as this low is not taken out. If that low is taken out, it's not going to be nice on the downside for this one, because then you could really break to the downside. That's why when I talk about the S&P and the fact that important number of 39.48 that we made on Friday is etched in stone, folks. And I mean the kind of stones they put over, that 6-foot piece of sod that we all stay away from. But that's going to be really nasty if we go through that. As of now, it's holding up relatively well. We just hit 40 again in the S&P, which is really good. But the number that it's shooting for is the 40-20 level. And the reason why that is important is because you're looking at something that's going to tell you that you're on the way to 40 120, and then above that, you're talking about 43.40 because it's got a chance to do it. And another good thing that's happened today is the fact that the bonds, after hitting that exact 61% retracement, and also with the notes made a slightly lower low and also reversed. So those things that we've been talking about so far started to work. The biggest one, the big surprise for me was that Japanese yen, because I was using that as a gauge that would be the one that would really be the one that turned the market, and it might have been, but it nicked me off at the high, and nothing I could do about it. I was already short the euro, so I didn't feel too bad about getting out. Well, at the end of the day, I have, but anyway, what I'm going to do now is take. Number two program that I'll have is I'm going to watch for a little ABCD now in the Japanese yen, maybe the 382. That would be about 40 pips. So I'll be looking to get back into that, later today or tonight. That's one of the things I'll cover when I do the videos tonight, to get it ready. But I had so many videos out there last night. Well, I had two videos with just each one of them was 12 minutes. And the reason for that was I was trying to show them the different alternatives of what might be happening. The first we started with gold, and we had the crude oil, and then we had the soybean oil, we had the euro, had the Japanese yen. We had so many of them going on, and we got stopped out of the yen, of course. But the others worked actually, very, very well, so there's no problem. But the problem is, when I got the gold, it surpassed all the others. So when you miss them, you just gotta, you remember the four fears, and of course the one that most people have, if they traded long enough, is fear of missing out, and there's a perfect example of that also. One other thing is Bartolioni, Mr. Jim Bartolioni will be on next week. Today's guest will be Michael Moore, Moore Analytics. He's going to be on at the half hour, and he's also going to be on Tom O'Brien's show. I'm going to be hosting that at 3 p.m. today. It'll be different material, of course, because there's a lot of stock people in there. We want to talk about stocks, but Jim Bartolioni will be talking to us about natural gas, and I wanted to bring your attention because we've had big moves in natural gas, especially today. We had the big move up. Everybody said that's the bottom, and hello, operator. We already know the name of that tune, but you'll see here that with Jim's charts, and he's got some other charts to go with it. I'll save that, to tell you see what's going on here. You'll see here that this is the longer-term weekly, and we come down, and now we're having a rally back up. And we've had a pretty good sell-off today, as near as I can tell. We hit a high of 270. Well, we only sold off about 10, so it's not really a big deal at all. So that's it. Cattle made a new low, which was another one that we were short. That's still doing, relatively okay. So that's pretty much what I'm doing. By the way, one other good thing is on my day trading show here coming up on the 8th, I'm going to have a cameo appearance for about an hour. Mr. Tom Hugard is going to be joining us, and he's going to be talking to us about the things he learned after he learned it all. And believe me, he's been trading now for over 20 years. And he's got a lot of experience. He's got that wonderful book, The Best Loser Wins. And he's going to tell you about the ups and downs that he goes through and what happens when he has these terrible days. And a terrible day for him, folks, is 7 figures. You wouldn't believe it, but I mean, that's like, it's like somebody trading a $1,500 account. He just shakes it off because he comes back, and a day or two later, he's only right about 30% of his trades. But he's good at what he does, and he's got the mental part of it pretty much working in his favor, and that's what makes him, so special. But we don't have many people like him on the show, so he's going to be joining me on my day trading show. I first met Tom, of course, in Las Vegas many years ago that I talked to you about it, and he gives me some credit for what he's done, but frankly, he's done it all himself, folks. All I did was say, look, this is a buy, this is a sell, and off he went. So that was pretty much it. Anyway, we'll have him on to show some of the stuff that he's looking at also, and we'll have Michael Moore on here coming up at the break. And there's one other chart that I did want to show you. Let me get it up here. This is from Mr. Shane Smolian, and we should be having Shane on. I believe tomorrow is his guest in the witness box tomorrow. But this is the Bradley model, and we still think we're going to be up here. This is where we are right now, middle of March, right around the equinox here, around the 21st. And then look out, then from then on, it's beginning to look like it could be a little dicey. But right now, it's still got an uptrend moving. We really need to get this S&P far, far away on the upside to that 39.48, because if we go below 39.48, folks, especially after a 2 or 3 day rally, shut the front door. That's going to be so bearish that you just won't believe it. And that would mean that probably the bonds would be failing also, and they can certainly fail. They only rallied a point today, and that's just because they've been oversold. So I hope that gives you some idea of what we're looking at. This very, very critical time period here in all the things of the market, and I think that's an important thing. We're going to take a break now. When we come back, we're going to be talking to our good friend Mike Moore of Moore Analytics. So stay tuned.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, with Mr. Crude Oil himself, Mr. Mike Moore of Moore Analytics. Michael, how are you doing today, my friend?
Good afternoon, Larry. Thank you very much for having me on. It's an honor.
It's our pleasure. It's an honor to have you. You've been telling us some good information. Tell the folks what you're looking at today. I'd like to cover, if we get a chance, Tom. Let's try it again, Larry. Mike, I'm thinking of Tom O'Brien because you're going to be joining me on Tom O'Brien's show at 3:30 today. But, Mike, if you'll talk to us about 3 markets that people have asked about, and one, of course, is the stock indices. Number 2, of course, is the crude oil, heating oil complex, and then also the gold. If we could cover those, And then if there's any questions that people might have, we might go from there. But you've done a great job. So show the folks what you're looking at.
All right, why don't we start off with crude oil first then? Sound good?
Sure, let's go for it.
Okay, let me just do my screen share here. Can you see my screen okay?
I think we've got it up there. They're telling me that we do, so we're in good shape, I think.
Okay, so to all the viewers, this screen represents, each one of these bars represents a day's range in crude oil trading. So this is considered a daily chart. If I switch this to a bar chart and scrunch it up a little bit, you can see we're in a long-term bull trend. And now we've been in this sort of corrective bearish consolidation here.
Yep.
And these lows have been shallowing and the highs have been shallowing, which suggests to me that the likelihood is probably that this is going to return to the upside, more so than a big downward trend. We'll have to see. Today, specifically, if this gap remains in place at the end of the day, which there is a high likelihood because it's 1:30 already, but if that remains at 2:30, meaning if today from this point on does not trade below 76.28, then we are going to leave a medium-term bullish reversal below. That is going to warn of higher trade in general for days ahead. So dropping down. Yep.
Are we seeing the same thing in the heating oil, Michael? Because you've shown us that several times, that there's a relationship there that is important, and
not quite the same as in the crude. I would note this, though, that this is a very major bullish formation up here, which does not mean I'm saying I'm majorly bullish right now. I'm saying if it breaks above there, then it's majorly bullish.
Oh, yeah.
But
wow.
A break above that would project this upward another 50 cents minimum. So we'll keep an eye on that, as we talk on successive shows. And then the unleaded gasoline, remember the two products that drive the price of crude oil is gasoline and heating oil. But that also
gasoline is a much larger market than the heating oil, isn't it? Because everybody uses gasoline. Well, except the Tesla guys.
Right. Heating oils, you use more for housing and stuff, but gasoline would be. That also has a gap higher in place in there as well today.
Wow.
I mean, obviously, when you're into this choppy consolidation, you can really see things either way. But if we drop down into a lower time frame in crude, and there's a similar picture that I'm showing you right now in crude. The similar picture is going on in the unleaded gas and heating oil. Now we're looking at a 60-minute chart. So each of these bars represents 60 minutes worth of price action. But we were in a classic bearish structure right here. We held exhaustion down here. And then I said we were starting either a bullish correction or a bullish trend. So we've gone up here, held the first exhaustion, rolled over, came up here, blew through this next exhaustion, and we're holding this upper exhaustion right now currently. So if this rolls over from here, we could start a whole new bear structure. And when I say a whole new bear structure, I mean that on a lower time frame. So this bear structure lasted, a week and a half, 2 weeks. We could see another bear structure like that. Or if this continues in a bull structure and takes out this formation above, that is going to project this higher. Let me just take a look at the analysis. So again, the maintain gap higher will leave a moderate bullish reversal. And then trade above here, this upper line, which comes in around in 79.20, that's going to project this upward at least $5, maybe more to the upside. And if we roll over and we take out these bearish formations, those will have projections to the downside. So currently, we are either correcting or in a bullish structure against this move down. If this takes out 79.29, that suggests that we're going to 80.78 and probably higher. And the product that is leading the charge, if you look at the heat cracks, is the heat. We left the gap open higher the other day. Let me just bring this in here. Heating oil had broken back above a formation here, which got it bullish. We've been running up for days. We broke above an additional bullish formation here. We've only seen part of that projection. But so far from here to here, we've seen 2,400, and then from there, another 4,380. Why do I bring up that amount? Because that shows you the difference between being long the heating oil as opposed to being long the crude oil. In under 24 hours, you would have made 4,280 more per lot being long the heating oil than the crude oil. Now we're consolidating a bit, but I think that this is going to continue higher. We'll have to see. If we fail back down through this line, then this is going to get crushed. And then the heat would be weak relative to the crude at that point. And real quick, the gas crack has been chopping sideways. If it breaks back above this formation in here, which comes in around like 34 even, I think you lost your internet, Larry. Okay, Larry, I didn't know whether you could hear me or not, so I'll continue on. But anyway, the gas crack here is bearish presently, but if it gets just a little bit higher and gets above this formation in here, which comes in around 34 even, then that'll warn of a rally in here, which would mean that the unleaded gas would also be strong relative to the crude oil, at least for a couple $1,000s per lot. So I'm going to move to the metals. I'm going to take a look at the gold. Just trying to make sure that you can hear me here. Bear with me a second. Just going to double check with Larry to see if he can hear me on that end.
I don't have anything coming in. Zero.
I'm here. Can you hear me now?
Yeah, I hear you fine. Yeah, Mike, I've got an internet problem here. I've lost all data on all of my systems with the exception of my cell phone, which is in a different thing. So you want to continue the show, and we got a break coming up here now, and then we'll continue it after that, okay? Hopefully I have this finished for the 3 o'clock show, but right now I've lost internet. Why, I don't know. So
Can they still see my chart?
Yeah, when you come back, we'll come back. I don't know when you will be coming back, but it will be, I guess, in about 3 minutes or so. Be around 11:42. That's my time. Around 1:42 your time. Okay, 12:42 your time. In about 3 minutes. Can you see my chart?
Can you see my chart?
Yeah, everything's good. I just can't see him. You just keep doing what you're doing. You're doing great. It's just my end.
All right.
Okay, we'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, I lost internet connection here for about 15 minutes, but we've still got Mike on the line, and he's been doing a great job, so please continue, my friend.
Okay, thank you. So looking at gold here, this is a weekly chart. We were in a base here for a number of years, broke out of this base into a bull trend. We've been consolidating sideways after holding a major exhaustion level here. I think that this major consolidation and pullback is a correction within this trend, and I think we have another run up to take out these highs and then search for other exhaustion levels above. We do take out these highs, there is a major projection to the upside, so it may stop at some higher levels. But currently right now, we've taken out the trend of this pullback. We've been long from down in here from different areas of breakouts. And then within that was put on hold a number of weeks ago when we failed back down through this formation right here on the 60-minute charts. So we've been bearish in here. This looks like a typical bearish pattern, and we held exhaustion down here almost exactly at 1810, which we talked about in the morning analysis. Let me just pull that over. You can see we had the 1810 buy signal right there. I said look for possible exhaustion in the 1810 area. So we held that within 1810.80 low, and we've been rallying since. This could be, if this holds, this should rally at least $29 from the low. We're probably almost already there. And then the question is this going to start a whole new bullish structure upwards? I think there's a good possibility of that. It's a little bit early to say for sure, but it did hold the ideal exhaustion levels. This one on this chart and also on the continuation chart held this area perfectly. So I would be bullish on this now cautiously and start to add on as we have other signals on the way up.
Okay, good.
You want to take a look at the S&Ps?
Yes, sir. That's always on everybody's mind. That's always one to be watching. We're trading right around 4,000 now, I understand. I lost beta for a bit, but that's what I heard from Bloomberg just a minute ago. So
this is a really key area for the S&P right here. So we had held exhaustion down here. We started a whole new bull structure that we talked about a couple shows ago. That ended with holding exhaustion right here that warned of a bearish correction. We've been in this bearish correction or bearish correction / trend, right? You don't know whether it is until you get further into it. But one of the ideal exhaustion levels to hold if it's going to be a bearish correction is this blue line right here, which we did hold. Let me just pull up this other chart. So I said we've been bearish for multiple levels from breaking below these different formations in here. And then I said there are areas of possible exhaustion below at 39.49 even to 39.40.75. And this lower one, we're holding the upper of these with the 39.47.50 low, and it bounced 77.25 before rolling over. The key about this is we've held this. We also broke above this formation decently, which warrants a decent strength. We came all the way back down here within just a couple points of the stop, and we've held and we're rallying. So if this starts to get up into here, this could start a whole new bullish structure.
Mm-hmm.
Now, why the argument for the bullish structure is as opposed to the bearish structure? Well, we talked about this, I think, on the last show. This is a daily chart here. This is more after the long bull trend up. This is a bearish structure, but it's more corrective in nature, meaning that we made a low here, we came back up through those lows. We made a low here, came back up through them. Made a low here, came back up through those lows. Made a low here, came back up through those lows. Whereas over here, you see you make a peak, but you don't really break below it. Make a new peak, but you don't really break below it. Make a new peak, but you don't really break below it. So that's more of a trending structure in general. This is more of a corrective in nature. So what does that mean? It's hard to determine right here, but it suggests to me that the likelihood of us seeing a major structure is probably more likely to the upside than to the downside. That's how I would look at it anyway. And so what you're doing now is getting long here, paying for the trade, staying long some of your position, getting long more here, paying for the trade, moving your stops up. If it starts taking out these formations above, then we have actual bigger projections to the upside. And that bullish, if this does start a whole new bullish structure, it could last 3 months roughly in a time frame. And if a bearish structure, very similar.
Wow. Very good, very good.
Yep.
Anything in the Treasury bonds that you watch?
Let me just say one other thing on that. If we take out
sorry,
this,
I didn't mean to interrupt. Go ahead.
If we take this exhaustion level out, the next lower one is at 38.78.5 to 38.57.25. It has to hold that one. It takes that one out, then we're headed down for 37.88.50, and then possibly lower, and then the market really could start coming off harder.
Okay.
As far as the bonds, I have not been watching the bonds, to be honest with you. I could take a look at them real quick, but I have not been updating any of, really I've been watching them.
Well, I'm an old border trader, so I still trade them all the time. So
Yeah. It could be something to look at, though, right?
well, they move pretty big sometimes. So.
Mm-hmm. Looks like they're just failing back down below this formation here, maybe or not. Let's see, or just pulling back to it. Looks fairly bearish to me right now, but that's just a quick look at it. You know, it looks like we pop up above this formation, then travel down above it. I'm not sure if this is a decent penetration below it or not. But if we take out that apex right there more significantly, then this could jump down to the lows.
Yeah. We have a question from one of our listeners, Mike, and because you do so much in the crude oil, gasoline, and the natural, not natural gas, but the heating oil, do you look at any of the major stocks like, what I can't even think of, Occidental Petroleum or anything like that, or Marathon? Do you ever look at the oil companies, ExxonMobil, to see how they're doing? I mean, does that affect what these futures are doing at all, or is that just a totally different animal?
No, I don't look at the fundamentals or the pricing of. Pull up a chart for you real quick. I'm gonna pull it. I don't look at the pricing of the major companies either. I'm not saying that there isn't any validity to that in helping you out. If it does, all the better. I got so much to be looking at as it is that it keeps me quite busy. This is an example, though, right here, if you're interested, of like major calls I made back in spring of 2020. And I did this for Conoco Phillips a while ago. But these are just examples of large calls that are based just off of technical analysis. And the reason why is technical is usually, even though the underpinnings of the market are driven by fundamentals, obviously they're not driven by technicals unless they're shorter term. The technicals are painting a picture for you quicker than the fundamentals are painting the same picture. This would be a classic example right here. I'd already been bearish for $20 down from the 65 even area, but when I said a break below $45, $1.50 break below 43.32 will project this downward $23 minimum, $35 plus maximum. This was on a Friday morning.
Okay, listen, we're going to have you on again soon. You're going to be with us today at 3:30, so see you then, okay, Mike?
Oh, yeah. Hey, by the way, can I just show the Bill Orlowski wanted me to pick this up, so.
We're out of time right now. Oh, wait, stay with us. We got 2-minute segment yet. Stay with us. Yeah, we got another segment. Hang in there. Yeah.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, and I believe we still have Mike Moore on the line. Mike, are you still there?
Can you still see my screen or no?
Yes, sir. We still can. Yep.
Oh, okay. Anyway, I think you just asked how if people want to get in touch with me, they can. I don't know if you can see this or the writing, but that would be a way. I'd also have taken interest in auto trade programs if people are interested in that as well. But I provide analytics in the mornings and in the afternoons for professional traders and industry companies and hedge funds. So. Also, I want to see, do you want me to go over the natural gas real quick before we go? We got about another minute.
Please do, because we've got a lot of interest in natural gas. I'm going to cover that at the 3:30 show too. So please go ahead.
Okay. So the natural gas, if you recall, we talked about this last time. We've been bearish since 8.44 for $6.47. and the break below 499.30 projected this downward 227 minimum, 470 plus maximum. We attained $3.25 of that so far. These are all on hold. Trade above 242.50 projects us up for 315 ticks. We've seen 315 of that so far. And then I just said I warned on the day that this warns of pressure before if resuming higher trade. So that 60-minute chart, we had just taken out this major formation right here. That's what gave us the upward projection. Popped up above it, pulled right back to the line perfectly, and then rallied 315 ticks. And then overnight, I just said we're probably going to see some pressure before if resuming higher trade. We saw some of that pressure right back down to this formation. We're starting to pop up right now. And just on a daily chart, you can see that we left that gap higher. We rolled over, tested into the gap, and we're rejecting out of it. So we could still see more on the upside. If this leaves a gap open lower in place, that would leave a minor bearish reversal above. And then we'll probably test
hey, thanks for joining us, my friend. We'll see you again in about an hour and a half, okay?
Yes, sir. Sounds good. Thank you.
Thank you. Mike Moore, More Analytics, folks. We'll see you later.